Just a few moments ago, I placed this trade right here on silver. And if this does manage to hit take profit right there, and this is going to be a payout from my funded account. So whilst we are waiting to see what is going to happen with this trade, if it's going to be a loss or a payout, we're going to dive into why I took the trade. But more importantly, we're also going to dive into all the ins and outs as to how you can get to a payout yourself. Now, I used to actually own a prop firm. I was 50% shareholder. So that means I owned 50% of the shares in that company. That prop firm eventually got acquired by a different prop firm. But the important part is that I have first-hand experience in seeing what gets people to a payout stage and what doesn't. So what exactly is the difference between these winning traders and between these losing traders? Not just based on intuition, but based on actual objective data. Now, these are all things that we're going to dive into, but first let's understand the reason why I took this trade. So what we're looking at is silver. And silver on the higher time frame looks very interesting to continue higher. We saw that we had some deeper retracements right here back into the fair value area. From that fair value area, what we saw is that we were consistently overtaking these resistance areas. So very simply said, we have these new fair value gaps right there. Those new fair value gaps, they hold, and we keep running these highs. That's the most important part. Now, what we see right here is that results in quite a clear bias. So the direction of price. In other words, this high right there, that's a very likely next target, that intermediate term high. So then it's up to us right now to figure out, okay, well, if that's the direction, if that's the next target, and how can we get there? As in, how far can we actually retrace before we do continue higher? So right here, what we do see is that we are currently in a third candle of a fair value gap, which is something very important to take into account. And the reason why is because price might want to consolidate right here to then sting back into the fair value gap to then continue higher throughout the next few days. And if that happens, of course, then that would result in a losing trade right here on my end. But you'll notice, of course, I already took that trade right here. So why didn't I wait for the daily fair value gap? Well, there's one important thing right here. And that is that we first have the target. Our main target is already quite close at that moment in time. On top of our main target being quite close, we also see that on the 15 minute, for example, right here, we see that we already have intention to continue higher. So price is already telling us, hey, I want to continue higher already. So it's not waiting. If it was a scenario like this, where we did see this consolidation and it would have been a consolidation for the remainder of this day, then it would have been very likely that we wait for the daily fair value gap to sting into it to then continue higher from it. But if price already shows us this intention, so this willingness to already continue higher, which, how does it show that? Simply through these bullish fair value gaps right there. And that to me is a sign that we already want to continue higher. So that this, in the short term, this daily fair value gap is likely going to become a breakaway gap to first reach this target and then potentially create deeper retracements. And then my entry is, what you'll notice throughout my videos, my entry is mainly based on expansion candles. And expansion candles are the second candle of a fair value gap. So what that means is, for example, right here, this is an expansion candle, this one. And what it does, the body closes above the first candle high right there. And then the third candle has an opportunity to create a fair value gap. A third candle, you'll see, when this closes above this second candle and also the first candle high, it again is an expansion candle. And it continues and continues. So those expansion candles right there, they show very great intention in order to move higher. So that to me is often my entry confirmation. So my first job right now, which is finding the highest probability trade scenario, is now done. Let's now see what is going to happen. I'm in the hands of probabilities right now. It is payout time. Now I first want to break down the trade right here that did hit take profit. Afterwards, I want to dive into the data that I have as an ex-prop firm owner on what is the best way to actually get to a payout. What makes the difference between these winning traders and these losing traders, and what your first step should be when you get to that payout stage as well. So this trade right here was a very fast trade. I'm recording this a couple of days after, but this hit take profit quite fast afterwards. Now let me show you my MetaTrader, because the only thing is that my fill on my MetaTrader was not great. So this right here is my MetaTrader, and you'll see right there I got filled quite high. So this is not even a 1 to 2 RR. Now again, it still hit take profit, and I'm not going to adjust my take profit just because my fill was bad, because that's going to screw with my trading plan in general and also the individual trade itself, so my edge. But of course, when this goes from a 1 to 2 R to maybe even a 1 to 1 RR right here, that also skews with the overall data. And that is something that is quite important to understand, because I should note down at this moment in time that I'm essentially missing one RR. So my trading plan is actually outperforming me at this moment in time. I'm the one messing up, you could argue. So for yourself as well, in your data, you always want to have a section. How is your trading plan actually performing and how are you performing? Because of course, you might miss trades. You might have a scenario right here where the RR is not optimal. So that way we can clearly compare your performance to your trading plan's performance and see if you are the problem or if the trading plan is actually the problem. And before we dive into the data, at this moment in time, I also want to mention that I'm on a very nice winning streak. I haven't lost any trade in phase 2. And in the payout stage at this moment in time, also, this is the only trade, but well, this is a winner. So I haven't lost any trade as well. Now that's not to brag about it, but in your case, you're also going to experience both winning streaks and losing streaks. You need to be prepared for that and always find the middle. So the way I see it is that on one extreme, you're going to have a lot of euphoric feelings when you have a winning streak, which is absolutely natural. But when you are on one extreme and you're very euphoric, it's going to cloud your judgment. So your decision making is going to suffer because of that. You're going to potentially feel a little bit invincible. The way I like to compare it, if you walk in, well, arguably any city around the world, there's bad areas. And when you have these bad areas, at first you might be frightened. You might be so frightened that you never wear a watch, or you always make sure that your phone is safe. And then with time, you'll notice, hey, I'm getting quite comfortable. So you start getting a little bit more brave, which is where you now potentially start wearing a watch. Now you start to walk out at night in a dark alley. And the moment you get comfortable, that's the moment they're going to rob you. It's the same in a winning streak. When you're so euphoric, you get very comfortable. You feel like you can take on the world. And the moment you get comfortable, that's exactly when the market is going to take its good time to humble you. If you don't humble yourself, someone else will do it for you. And in trading, that oftentimes is the market. Now, that's the danger of a winning streak. And of course, a winning streak is great and all, but the psychological things that come with it can be very dangerous and can eventually lead to this whole overtrading cycle. And you, for example, fully crashing out and then eventually blowing all the profits that you made in a winning streak. Now, in a losing streak, it's important to somewhat do the same thing. So to stay neutral, even though that is very difficult during a losing streak. So the first thing you also want to do in a losing streak is compare your trading plan to your performance. So are you still living up to the expectations of your trading plan? Are you the problem or is the trading plan the problem? And also understanding, I've had this printed out ever since I started trading. And what this is, I'll just put the picture on screen as well, but it tells you essentially how many trades you can lose in a row within a 50 trade period based on your win rate. So for example, if your win rate is 50%, which is a good average amongst a lot of traders, then in a 50 trade period, there's still a 97.1% chance that you're going to lose 6 trades in a row. So I need you to understand that losing streaks are completely normal, just like winning streaks. But what you do in these streaks is going to define you as a trader. So winning streaks, you want to stay as neutral as possible to be able to fully capitalize on the momentum that you are in. But losing streaks, you want to stay as neutral as possible as well and protect your capital at all costs. What tends to happen is that profiting from an easy market is not necessarily that difficult. Again, I remember the quote, everyone is a genius in a bull market. If price goes up, you simply need to buy and everyone is right. It feels like you're a genius. Again, you get into a very euphoric state. But if you stay in that euphoric state and the market conditions are now a little bit tougher for your trading plan, and now you start to experience these losing streaks, that's where amateur traders essentially get defined or get separated from professional traders. Because amateur traders will blow all their profit in those losing streaks. Drawdown periods, losing streaks, tougher conditions in the market, it's completely normal. But how you go about it, how you survive these conditions, that's what's going to define you as a trader. That's also what eventually then investors and also prop firms are looking for when they want to A-book you. So for example, in the conditions that I'm currently performing, I could very well be A-booked. These are really good conditions for my trading plan. But the moment every single market starts consolidating, how will I perform in those conditions? Do I not blow all the profits? Can I survive those conditions with profit at the end of the period to then go potentially into a winning streak again? That's what investors look for. That's what prop firms look for when they want to A-book you. So let's now start diving into a little bit of the data. Again, Here you have my account. Essentially, let's go to the details. And you'll see in the details right here that my reward day is on the 22nd of August. I am going to edit that. I believe with FTMO, you have 3 times you can actually edit that and you can move it to an earlier date. That's exactly what I'm going to do. And the reason why I'm going to do that is because of the following. In trading, your job as a trader is to make as much profit as possible, which of course is nice. And of course, we want profit as traders. But your first goal is to protect the capital that you already have. So for example, for the investor I trade in, when I used to do a pitch saying, hey, I would like to trade your money. This is my pitch as to how I'm at least not going to lose your money. And then everything that's added on top of that is just a bonus. It's an extra. It's nice. That's the first thing to understand. The second thing to understand is that these challenges, so every single evaluation that you're going to do at your different moment in time, serves a different purpose. So the absolute first challenge that you are going to do, the same first one I had right here. This first one I did. I bought a 50K account, 50K US dollar, which is 40,000 euros. So I went into that challenge with the expectation, this is already going to be a challenge for me to gain a whole lot of money from it. That's also the reason why it was a 50K US dollar account and not just a 10K account. I already made the first mistake right there because I didn't really have any experience in trading. Your first challenge is going to simply be to gain experience and see what is working for you, to figure out what is exactly my trading plan, what am I exactly waiting for. So the first challenge, the first evaluation, should be a small account just to get some skin in the game, just to get some reps in. Then you get to the payout stage. So the ball starts rolling further and further. The first phase, or phase 1 and phase 2, that's once you pass it once, you get the hang of it. So it becomes quite simple. You sort of need to get over that bump of passing challenges to now get the ball rolling. Now there's a plan behind it, so how you want to approach it. Your first payout that you are going to get is not there to get crazy profits or anything. So whenever you get a fresh funded account, you have a new live funded account, the first payout you get from that new live funded account is not there to get 10%, 20% profit and get a large payout immediately. It's there to, what we mentioned earlier on, your job as a trader is to minimize the risk. So the first thing you want to do is get your investment back. So if possible for your prop firm with this FTMO right here, it is possible, get the refund of the fee that you paid. As someone who has seen this with their own eyes, monitoring someone else's metrics, it felt very wrong because we had a trader that also had a 100K account that was also in the payout stage. And that trader eventually made it up to 8K profit. So 8% profit in total. All that person had to do was simply wait. Simply sit on their hands and wait. And they kept trading. They kept trading for more and more and more. And then eventually that first potential payout that I could have gotten from that new live funded account, that turned into a blown account. And all they had to do was just simply wait, and they would have walked away with $8,000 US dollar. And the fact is, that first payout, so that fee that I'm about to receive, and well, the around $400 US dollars. So in total, I believe that's around $950 US dollar. And that money I can now use to reinvest it into another challenge, into another evaluation, into, for example, stocks, whatever I want to invest it in. And that way you get the ball rolling. You get this endless cycle where your trading really starts to turn into an actual business, where you put into it one time a fee of, in this case, I believe it was $540 US dollar. And with that challenge, once you start passing it, once you start getting payouts, you don't really need to put in external money anymore. Every money that you make right here, you can reinvest it and you can get to another payout. And that way you scale your capital, but you scale your payout amount as well. So this then really becomes a marathon where this is not about getting a one-time hit. We are better than that, with all due respect, but a $10,000 US dollar payout one time doesn't really excite me. So that's $10,000 US dollar over the course of a couple of years. I'm sorry, but that number doesn't really excite me. What excites me is getting consistent payouts over the years, which are going to add up to a whole lot more than just $10,000 US dollar. And I'm saying just $10,000 US dollar like it's a small number, but relatively seen, if that's spread out over a couple of years, then yes, that is quite a relatively seen low number. Now, from the data that I have from, again, owning a prop firm, the pass rates are extremely low. And this is not necessarily because it's very difficult to pass challenge. Well, again, difficult is a relative term, because yes, for any person who doesn't really know about trading, it's always going to be difficult to pass a challenge or an evaluation. But for someone who has somewhat of an idea of what they're doing, it's quite straightforward to a certain degree. And that's the thing, because most people that go into an evaluation, they have, quite frankly, no clue what they're doing. They're not using a stop loss. They're not using take profit. The RR, what we saw from losing traders compared to winning traders, the RR for losing traders is negative, so 0.5 RR. And that combined with only a win rate of around 40%. And compare that to winning traders that used to have an RR of around 2.5. And combine that with a little bit of a higher win rate. And also losing traders, what we saw is that they take around 8 trades a day. And winning traders, they still have quite high in my opinion, but that's around 2 trades to 3 trades a day. A lot of it comes down to risk management as well. So what we saw, losing traders, they just essentially use these random lot size for future traders, use random contract sizes, using the full daily drawdown to essentially hope that they might pass the challenge. When you get to the live stage, I'll put an email right here. They also tell you, hey, take it easy, essentially. But what these prop firms also do is they make it very difficult to get to that first payout. So in a very subtle way right here, they essentially, your first reward day is going to be a month after you get the live funded account. So you have a full month essentially to trade right there. And for a prop firm, that is, you have a whole month to mess up. Because of course, the reality is just that a prop firm they would prefer for you to mess up right there. So when you have a whole month until you get your first payout, of course, that's going to mess with you. As in, do I stop trading? What do I do right now? So this is where the plan of action comes in. So what I'm going to do, I'm going to move my reward date earlier right there to the earliest possible date right there. And when you start doing that, then I don't have to wait right now a month until I get that payout. But also it limits my burden, it limits my psychology where I don't feel like, oh, I need to wait, like, do I stop trading? No, because now the fact of the matter is, what I'm going to do is I'm currently in $500 profit. I'm going to lower my risk even more. And if a new opportunity does arise, I'm going to take another trade with $250 in total as my total risk. So if I lose that trade, my payout gets to 250, but I still get that fee, right? That's important to understand. I still get refunded that fee. So if I lose that trade, I just simply stop trading and I wait for the reward day right there. If I win that trade, again, I'll keep trading right there using the same amount of risk. Now I use these FTMO challenges just purely for testing sake, essentially. This was also to test a new trading plan, which, well, has been going quite well. But for you as well, what you can also do is you can simply stop trading this, and the money that you are going to receive from the reward day, so from the payout, you can already invest that into a new challenge. So whilst you don't do anything with this one, you take the money that you are going to receive and you pay that upfront essentially into a new challenge already. So you can get that going and potentially have 2 live accounts eventually. And that way the ball will start rolling. All right, perfect. Thank you.